You know as well as I do, the stock market is essentially a battlefield. Every single minute of the trading day, a fierce, relentless war is being waged right there on your charts. It's this brutal tug of war, right? You've got buyers trying to push prices to the moon and sellers fighting tooth and nail to drag them down into the abyss. Now, if you spend any real time looking at market charts, you already know that every shape, every shadow, and every wick is trying to tell you the story of that exact conflict. So in today's explainer, we're zeroing in on one specific, highly volatile pattern that emerges straight out of pure market chaos. It's a formation that can give you a massive edge, but only if you know exactly how to decode its signals, and more importantly, if you have the icy discipline to wait for its confirmations. Let's get into it.
So the name of this pattern comes from a really evocative and honestly incredibly fitting concept. High wave translates directly to ocean waves, or samudri layering. I want you to literally picture the ocean during a violent, totally unpredictable storm. Imagine what it feels like to be a trader caught right in the middle of those crashing waves, just experiencing these wild, aggressive price swings whipping back and forth. That storm perfectly captures the turbulent, volatile market forces you're looking at when this specific pattern forms. When you spot a high wave, you're quite literally looking at a visual representation of a market that is churning violently, completely lacking control, and desperately struggling to find its true direction through all the panic.
Okay, here's our quick roadmap for this explainer. First, we'll officially meet the high wave. Second, we'll break down the anatomy of the candle. Third, we'll look at catching the upward trend. And finally, number 4, we'll cover the inverted high wave. All right, let's jump right into section 1, meet the high wave. Now, since you're likely already familiar with the standard spinning top candlestick, you actually possess the foundational logic for how this whole thing functions. The core structure is identical. But the real difference? It lies in the extremes. The high wave features much larger, significantly extended shadows. Just imagine taking a standard spinning top and violently stretching its top and bottom wicks out as absolutely far as they can go. Why does this actually happen? Well, it's because during that trading period, there was this intense burst of euphoric buying that drove the price sky high, which was then immediately followed by an intense wave of panic selling that dragged it all the way down to the depths. And then, after all that madness, the price eventually settles right back near where it opened. It's basically a mini narrative of total, exhausting market indecision just stretched out vertically on your chart. And this brings us to a crucial rule for your trading discipline. Honestly, it's where so many amateur traders get it completely wrong. Amateurs will obsess over the pigment. They'll panic and sell everything if the candle is red, or they'll prematurely celebrate and buy if the candle is green. But listen to me on this. With the high wave, the color of the body does not matter one single bit. The true story isn't the color, it's that massive indecision shown by the wicks. What actually matters, and what your entire strategy depends on, is the preceding trend of the market and the critical confirmation that absolutely must follow it. Moving right along to section 2, anatomy of the candle. So despite those dramatic extended shadows representing those wild price swings we just talked about, the core job of the high wave is functionally identical to the spinning top. It signals that the current market trend is rapidly running out of steam. I like to think of this pattern as a massive flashing stop sign on your chart. The dominant side, whether that was the buyers driving the price up or the sellers dragging it down, has suddenly hit a brick wall. They're totally exhausted. The buyers and sellers are now deadlocked in this volatile tug of war, which means whatever momentum was driving the price previously has completely stalled out. And it is exactly this stall out, this specific moment of pure exhaustion, that gives a massive edge to the patient trader. Let's get into how we use this. Section 3, catching the upward trend. Okay, here is your definitive step-by-step playbook to confirm a bullish reversal at the bottom of a downtrend. Step 1. You spot the high wave at the very bottom of a falling market. The stock has been bleeding out, dropping steadily, and then suddenly, boom, this volatile shape appears, signaling total exhaustion. Step 2. Well, step 2 is the ultimate test of your psychology. You must wait patiently. The urge to jump in early, that intense FOMO trying to nail the exact bottom, will be screaming at you. But true discipline means sitting on your hands. You literally do nothing until step 3 materializes. And step 3 is this. You wait to identify a brand new green candlestick that opens and, importantly, closes completely above the highest price point of our high wave candle. And there it is. This is your definitive signal. Once that green candle definitively closes high above the previous peak, you finally have your absolute confirmation that the deadlock is broken. The tension has snapped. The buyers have won the war. The sellers are officially overwhelmed now, and the stock is preparing to aggressively climb. That close above the peak is your undeniable, actionable signal to enter the market with total confidence, knowing the momentum has officially shifted in your favor. All right, let's flip the script for Section 4, the inverted high wave. So the pattern actually undergoes a specific name change when it shows up at the absolute peak of a rising market. It officially becomes the inverted high wave, or as it's sometimes called, the inverted highway. The visual shape is identical, and the underlying psychology of that tide tug of war remains exactly the same. But its location at the top of a massive rally creates a uniquely dangerous scenario. What you have here is late buyers, fueled by pure greed, desperately jumping in at the top, only to be suddenly met by massive, suffocating selling pressure. These late arrivals are now completely trapped. The smart money is hitting the brakes, and that creates an incredibly compelling warning sign that the whole rally is about to collapse. Continuing with that narrative of the trapped buyers, we must once again wait for the market to prove its fatal intent. Step 1, you spot the inverted high wave at the dizzying top of a strong uptrend. Step 2, you hold your position. You fight the urge to act prematurely, and you wait for a red confirmation candle. Step 3 is where the trap finally snaps shut. You must ensure this new red candle doesn't just form, but actively closes completely below the lowest price point of the inverted high wave. You see, that lowest shadow was their absolute last line of defense. When a candle closes below it, the floor has officially fallen out from under the market. Once that critical support level is breached and your criteria is met, the signal is blindingly clear. The sellers have seized total control, and the stock is highly likely heading downwards. Now, this specific confirmation carries massive dual utility for you as a trader. If you're playing defensively, this is your blaring alarm to exit your long positions safely and protect those hard-earned profits. On the flip side, if you are an aggressive trader, this is exactly the breakdown you want to see to begin confidently hunting for shorting opportunities as the price collapses. Ultimately, mastering the high wave pattern really just boils down to extreme emotional control. The market is constantly churning with chaos and indecision, basically trying to bait you into making a costly mistake. Spotting the shape itself, that's only half the battle. Waiting for the market to actually validate your thesis is where the real profitable work happens. The market always pays for patience. So the next time you see these wildly extended shadows forming on your charts, you really have to ask yourself, do you have the unshakable discipline to let the market prove itself first, or will you just let yourself get swept away in the storm?